Hey traders, and welcome back to another Sunday video. If you're new to my channel, each Sunday I put out a video basically forecasting or showcasing setups or things that I see coming for the week ahead in the markets. If you do enjoy these videos, by the way, I'm very closely watching the like button number count that I see on my end in the analytics. If you could let me know that these types of videos are helpful to you, make sure to smash that thumbs up button as we start this video. It really would help to support the channel. And this week should be interesting. Last week we had NFP, which came out very, this ugly, terrible daily chart candle we saw on the dollar was very indecisive. We saw movements back and forth on the jobs number with the PMIs that followed. And this week, by the way, guys, guess what is on the radar? CPI. We have the CPI number coming out on Thursday, followed by PPI. Actually, I believe it could be Wednesday or Thursday. We'll check this in just a second. But the point is we get inflation reads this week, and that is all the market is turning its attention to right now, following what was a relatively stable jobs number that we saw on this past Friday. So in this video, we're going to be going over setups for things like the US dollar, the S&P 500, and of course, some currencies as well. You can see I've got a very diverse right-hand side of the screen here full of different charts and things that I'd like to take a look at. So let's go ahead and jump in. So just a quick reminder, we had pretty good jobs out of the U.S. We saw more jobs created than expected. Despite that, though, we did also see the previous number revised lower, not so great. We saw average hourly earnings stay strong, and we also saw unemployment rate remain at 3.7%. And if we now take a look at the actual performance of the market in relation to this, we saw the dollar move back and forth. We saw gold move back and forth. We saw the S&P 500 move back and forth. And of course, pretty much everything else moved back and forth, except for oil, which was up 2% on Friday. For the most part, what we saw last week was a rocky start to the first full trading week of 2024. We saw the stock market come down a little bit, and we did see the dollar see a nice push up. And so dollar bulls, I think, are looking for this week to either see if we can actually break through this level. Meanwhile, bears are thinking the same thing. Can we hold this level and get lower? We're going to be doing a more comprehensive price action breakdown in a moment, but what you need to know right now is that the dollar downtrend, I think, is still intact. And with that, the S&P 500 pullback here that we're seeing could actually be a good opportunity. Because before we get too far into technical analysis here, I do want to let you guys know my current positions, trades that I am in myself. So I'll show you that now. So I am officially back in my S&P 500 trade. I am just barely above break even on this trade, floating about $280. Of course, the markets are closed when I'm recording this, but I do have a long position on the S&P. My idea is essentially this. If we can hold this structure and continue to push north, then great. I'll look to trail a stop and let a trade kind of form here. And if this level breaks, if I'm too early to the idea and we're headed back to retest further levels on this daily chart, as you can see, we can scroll back and this is a key zone. Looking left on this chart around 4,600, this will be my first attempt, and my second attempt will be down here at 4,600. To see if I can get long. I am overall bullish. If you've been watching the channel for a while, you know this. I am very, very bullish on the indices overall in the last few months. And I caught most of this run up here almost perfectly. I caught the lows on the breakout here and traded it and closed it here on this red candle there. So the point is, we caught the bulk of this move here. And with this pullback, I'm happy to look for an opportunity to get back in after we formed this low at 4,700 on the S&P. So I do have my position. And by the way, if you're wondering how I can trade directly on WeBull, it's because I use, directly on TradingView, it's because I use WeBull, and they're an American US regulated brokerage that allows me to trade stock ETFs directly on WeBull. It's super convenient, and if you would like to do the same, there is a link down below in the description. If you choose to use that, you'll be supporting my channel. You'll get a free couple shares of stock when you sign up, and so will I. So I very much appreciate it if you choose to use that link. Otherwise, you can just check it out yourself. Next up on my current positions, we've got a EURUSD long position that I am currently in with a stop loss below the market structure lows here that we formed on Friday. If we take those lows out, I'm out of the trade and I'll stop out. If we continue to push north, I should have a good risk reward on this trade. And at that point, what I'll be looking to do is try and trail stops along the way. Of course, if I take any additional trades or make any updates to this position, you can keep track of that inside of our Discord community, which will be linked down below in the description. Next up on my list of trades is my Russell position on the IWN. This is, of course, an ETF that tracks the Russell 2000 index. It's a collection of smaller companies that still make up a core key piece of the American economy. This has not participated in the same amount of rally that, say, the tech stocks and NASDAQ have. I am a bull overall on the Russell, and I'll show you this. It's actually an options trade I've got going on right now. So here we go. We're inside of my WeBull dashboard here. And what we can see is that I have a couple different options contracts for those of you who do care about options or are interested in learning more. We do a lot of option stuff inside of my Discord, but I currently have puts that I've sold on the Russell. These are trading for pretty much max profit for about $1,225. That closed on Friday, out of the money. If you're familiar with options, or not, again, that's a whole rabbit hole. But point is, I have some options trades, one not going super well, the other one closed for max profit on Friday. Meanwhile, we also have some puts that I've sold on the energy sector as well as the technology sector in the stock market. Both of those I sold on Friday. Actually, I sold XLE, the energy ETF, a little further back, a couple days back. Meanwhile, I sold this on Friday and immediately saw some really nice gains as the market rebounded towards the end of the trading day. But there goes my current WeBull positions. By the way, I mentioned WeBull earlier. If you want to sign up with them, there is also, of course, there's a link down below in the description. But if you're someone who trades currencies or you'd like U.S. regulated brokerages to pick from, all of the things that are related to that can be found down below in the description. I've got a couple brokers down there linked, and they each have sign-up perks. So make sure to check out the description for some extra goodies and free stuff that you can get by using my referral links. And again, you'll be supporting the channel, and I'll very much appreciate it if you choose to do so. Next up, a look ahead at this week that we do have in front of us. It is an active week, to say the least. The real banger of this week will definitely be CPI, so I'll show you this really quick. So on Thursday and on Friday, so it is in fact a Thursday-Friday split, we have CPI coming out for the US and PPI coming out for the US to follow on Friday. So the end of this week should be pretty volatile, but I imagine that there will be some volatility leading up to this news event, whether you trade FX, gold, etc., indices, whatever you trade. This will likely move the needle for many of these markets and perhaps even give us a decisive direction on how things are going to look going forward. Speaking of that, let's go jump over to the chart and I'll talk about what we see going on right now. So we're back to the charts and we're taking a look specifically at the US dollar index, which I think is still solidly in a downward trend. Despite Friday's wonky price action, you can see that overall, we held a level of resistance that we've called out for some time on this channel. I've mentioned that the sort of 102.5 region has been a stubborn place for the sellers. You can see price held here for the bulls, but when it broke out, it became a really strong consolidation point before selling off. Now with price retesting this area, I do think that there's a possibility we get price action to roll over here, especially with that jobs number. People were a little confused. They say, well, Nick, jobs numbers were good on Friday. Why didn't the dollar explode higher? Well, it did initially, but I should add something here. The strength in the jobs number was not immaculate. There were revisions lower on the previous report. And so we kind of got this decent, pretty good jobs number, but nothing to change the entire narrative, right? The overall downtrend in the dollar in that case, in my view, is still intact. Despite some, pretty good jobs numbers, it wasn't enough to completely explode the dollar out. And I think it's going to yield and sort of submit to the overall trend that we do have going on in the dollar index, which is, of course, a downtrend. As yields and rates are expected to come down in 2024, that's going to continue to pull this US dollar down, in my personal opinion. So I'm looking at these levels as possible resistance points to be a bear. I am a bear as we speak, and there's a couple charts that I'd like to keep a close eye on in relation to that. For, of course, a reference that would also be relevant to gold. And, we can take a look here at the 4-hour chart, what I'm looking for, and we almost got it, by the way. For those of you guys who watch gold, I thought we would see a close outside of this with this huge reversal. Many of you guys might have been watching with me live. I live streamed this event. There was a huge wick down, and this was, of course, the jobs number looking pretty strong. But then it was PMIs, guys. PMIs showed serious cooling that got gold to do this. A little question for the fundamentalists or people who are learning fundamentals in the room. Why did that PMI number, which was cooler than expected on Friday, services related PMI fell? Well, it was a growth, but it was very mild compared to the strong growth that was expected. Why? Why did this cause gold to spike so much? PMIs track basically the economy. And if the PMIs are weak, that could cause gold to spike, right? Because weaker economic outlook is generally a positive thing for gold, as it kind of increases the uncertainty about if the economy is going to stay in there. And if there's one thing that spikes gold's price, it's a little bit of fear thrown into the mix. And so we saw that. We saw PMIs kind of freak investors out a little bit alongside a jobs number that was good, but nothing that's going to massively change the Fed's outlook. And so boom, we got the big spike. Now, why do we not give follow through? That's a little bit up to debate. And I think price action, this sell-off here, kept me out of any trades. However, I am looking for a break and retest opportunity as we go into this week. I am bullish on gold. I think that rates continue to come down, and whether that's for recession or for a soft landing, both scenarios could actually be just fine for gold bullish setups this year. That's why I continue to be a bull on gold and looking for opportunities. If I take a trade, like I said earlier, you can join our Discord channel to see trades I'm taking live. And just to add a visual to what I'm saying about the Discord group, so we share our FX trades, indices trades, commodities, stock trades, options trades. We share all of it. And when I say we, I'm talking about myself, Frank, who is someone who I've traded alongside and actually works at my company now, as well as Ivan. We've traded together for a number of years. And if you'd like to come trade along with us, it's a new year. It's time to get serious about your trading. If you're not already in there, take advantage of a huge discount that I've got for you today. If you use the link down below in the description and the promo code, you can get a huge discount off of any of our memberships, whether you join us for a month, a year, or unlimited. All of that can be found down below in the description. We'd love to have you join us. Again, you'll keep up with all the updates, and more importantly than just a bland signal service, the idea here is that you actually get trade breakdowns, charts, analysis, why trades are being taken. And again, we do those throughout the week. So if you'd like a very active trading community to join, that is the place to be. Make sure to use that promo code, like I said, that gets subscribers a significant discount off of memberships in the group. But again, this is what I'm looking for on gold. I'm looking for breakouts here this week. I mentioned that I already have an S&P 500 trade, so I'll pull this back up. The S&P 500, a little bit of an interesting one. On the daily chart, we saw what seems to be an indecision candle. And this is what actually really got me back on the bull camp, is I saw this candle after at a key level of support. I still like the overall, rates coming down story. And that has me very bullish after, what was basically 5 days of selling followed by almost a sixth one. So I like this setup, and I think that there could be upside to this trade. My stop loss is below the lows if we do see price break down through Friday's low during the NFP trading event. So that's what I'm looking for. Same thing with NASDAQ, though I don't see it at such a key level of support. By the way, if the S&P 500 breaks lows, I may actually be looking closer at the NASDAQ if it can tag this level of support here going forward. Sorry if you can hear my cat. She's crying at the door. Let me let her out. Okay, my cat has been let out the door. She won't be screaming at the door anymore, so we should be all set to continue. Same thing with the Dow, by the way, guys. Dow stocks, I'm actually pretty bullish on these, value, strong companies that are making good bits of money. I think I like them for 2024. I don't see 2024 being the same growth environment that, the massive upside that was 2023 for like tech stocks and NASDAQ. I'm not as bullish on that area of the market. I think that it could be a little bit more of an inclusive market this year. If you take a look, by the way, for index traders, a cool one to check out is RSP. RSP is an equal weighted ETF that tracks the S&P 500. The S&P 500 puts heavy weight on things like Apple and Nvidia, etc. RSP is a sort of more equally weighted behind all the S&P 500 companies. It's one that I'm watching this year, and I think that actually could be some nice upside to this one this year, relative even to the S&P 500. Could be an interesting one to watch. So in terms of metals, I should also mention silver. Silver's had a beat down. I think for me, I'm not a super bull on silver until we see gold really start to break out. That happens, I might look a little closer at silver. Another market I'm watching close is oil. You can see oil has been in a pretty steady downtrend, but I showed you guys earlier, remember I have that XLE position. If you're not familiar with XLE, it is an energy ETF, and you can trade ETFs with WeBull if you don't already have it. Again, I told you about that earlier, but I traded on WeBull. I can trade ETFs, which are basically baskets of stocks, and this basket of stocks is surrounding the energy section. So I think that, you can see they trade very close. Keep your eye on oil for a second and then look at it compared to XLE. You can see they trade very, very closely related. I think that if oil catches a little bit of a bid, and it seems like it perhaps is trying to form a bit of a higher low here, if we do start to see oil breaking out, I think that oil could have a little bit of an improvement here. We could see prices on oil start to rise, and that could drag energy stocks higher. It's something I'm watching going into this year. The latest round of COT data is in. This shows us what institutional money is buying and selling. We can have a look here and see, as of the latest money flow here, where institutional money went in the previous report. What we can see is that US 30 got a huge bid. So institutional money seems to have been getting long on Dow stocks. These are your solid big companies like your Apples, your Coca-Colas, etc. Same time, we saw CAD, NASDAQ, love to see that. Kiwi, Australian dollar, platinum. These things saw big net change to the upside. So bullishness on these assets. At the same time, we can flip the script and we can say the dollar got a bearish read from institutional money. JP225 saw some bearishness. Oil saw some bearishness, and the South African rand. I like to see that the trade setups that I'm looking at are actually being confirmed or denied by institutional money flow. This is, of course, why I keep a close tab on this particular section of the Edge Finder. It's why it's so close to the top. The COT data is something that I watch on a very close and consistent basis to see what institutional money is doing relative to what I am doing or looking to do for either confirmations or the lack thereof. On the flip side, same thing for retail positioning. I like to see that retail is piled into a trade that I think contrarian too. We know that retail traders typically lose money. And so if, for example, you're watching the dollar Swiss, what we can see is that retail traders are 92% long based on the data that we pull here for this. Same time, dollar yen, retail traders are 68% short. So there's a bias here to potentially be contrarian and be long. So I find this to be very, very useful to just check or get a read on things. If we take a look at oil, by the way, this is giving us a bearish read. So based on what we've just talked about, this is going to probably keep me out of any oil longs because we're seeing some contrarian stuff here telling us, well, retail's very piled into long. Institutional money, based on what we just saw in the COT data, is telling us that big money kind of went sell side. So not loving the oil setup from that perspective, and that's why we have data to check our work, so I don't jump into trades that I don't have good logical reasons to do so based on data, not just based on a pretty chart. That is, of course, the name of the game on this channel. We talk data, we talk market data to actually give us more of a defined sort of set of ideas rather than just a simple technical analysis chart doing all of the decision making. So next up, we'll take a look, of course, at the AAII sentiment. If you're somebody who does care about index, if you're an indices trader, if you trade NASDAQ or Dow or S&P, this is a really important new chart that we added to the Edge Finder. You can always check the stock market sentiment. We get this week to week here. And what we can check is the different, the bullish or bearish percentage here is really key. Notice how when traders here, these are a collection of retail traders for the most part. When retail traders are overall getting very, very bullish on stocks, you got to be careful. Same thing when they get overly bearish. This was a wonderful signal to actually get long. We're still kind of on the higher end, but not nearly as high at 32% that we were. And that, by the way, that takes the bullish percentage and just subtracts the bearish percentage to get this yellow derived line that we've created on the Edge Finder to read what sentiment is. When things get too bullish, I like to back off. When things get too bearish, I actually look at that as a buying opportunity. So something to consider from the AAII Investor Sentiment tab here. Next up, we'll take a look at the Seasonality scanner. This is a really cool new scanner that we added to the Edge Finder. It helps you to look essentially at what essentially the seasonal trends of various assets are for this current week, as well as next week, this current month, and current next month. So very, very cool chart here, but you can see, for example, that the S&P 500 has a slight expectancy to be strong next week. So that's kind of cool. You can take a look at gold, for example. This month is very positive for gold and expected to also be positive in February. So being able to check this and look for seasonally defined setups can be huge for possible opportunities to look out for. So I see gold as a possible bullish setup for this week and next week, and we'll watch to see if that does in fact come true. By the way, guys, if all of this data seems helpful to you and you'd like to use it in your own daily trading analysis, I'd highly encourage you to check out the product that we have listed on our website. This is the A1 Edge Finder. It is, of course, my company's flagship product. We are software developers that are also traders. We build data for our own trading, and we sell it as a business. So if you'd like access to this data, if you think it would be useful to you, there is a link down below in the description that will get you a nice discount if you use code YTVIP, as you can see on your screen right now. And with that said, guys, I hope this video was helpful to you. Make sure to hit that thumbs up button if you have not already. Subscribe for more free daily content if it would be useful to you. And we'll see you back in the next one. Have a good trading week.